Right, but the consumer-related themes and stocks are obviously finding favor in the market. We've already seen that play out with Meta's revenue stream, right, with Chinese retailers, Chinese advertisers propping up the numbers there. Do you think that you would want to ride the consumer wave in China right now? And anything linked to that, especially on the discretionary side?
Yeah, I think that's the way that you'd want to play China at the moment, especially in the near term, and the fact that we've definitely got a little bit of a decoupling going on when it comes to some of the larger cap names, especially in some of the sectors which have had some decent headwinds against them, and I wouldn't be surprised if they continue. But still, from the online retailer's point of view, from the consumer and the consumption play, especially ahead of this long weekend and Golden Week that we've got coming, and the numbers that are coming out there, especially in the leisure and the tourism side, looks definitely to have some massive increases, all relatively coming from a lower base, because obviously this time last year we're in the midst of a lockdown. So cautiousness, optimistic, yes, but I still think you've got to be very, very nimble in terms of your portfolio and how you're looking at the mainland market. Still would prefer A's over H's and over ADRs still, which is a little bit devoid of that geopolitical risk, but still looking to be cautiously optimistic and still looking for a much better second half than we've seen so far this year, which, to be fair, has been a little bit disappointing.
But is it going to be enough, Andy? Because we've argued, I suppose, or belabored this point before when it comes to the expectations of recovery and what's actually going to be playing out. And you just look at, all of the hullabaloo when Alibaba was going to split into 6, everyone was calling, it's going to hit 150, 160, 200. And now it's back well below what it was prior to that at around about 80. So how does this resolve itself?
I'm sort of laughing to myself as I'm answering your question, because I've said this so many times. It's like, the gift that keeps on giving but never gives, right? We've still got to see a catalyst, and I'm of the view that the market is ripe for a decent bounce, but it needs to have some level of a catalyst and an indicator that's going to do it. And we've pointed to so many factors in the past which seem to disappoint. And at the same time, to be fair, developed markets, especially in the US and especially Europe, have been so resilient that global investors are finding it difficult to find a reason to come and put their money back into an equal weighting of what they used to have when it comes to China. So whether that catalyst is going to be some stimulus Beijing-led type package, which again we've been wanting and looking for, or it's going to be some huge consumption economic numbers improvement that we've again been kind of waiting for. If you look at the earnings that have come out, they're all decent, but everybody focuses on guidance. Guidance always seems to be a worry. So obviously we've got, and I can see you put it up there, this whole COVID rumor, we've got property tax rumors. We just seem to be lacking a really definition in terms of a catalyst and or an action that's going to drive investors back towards this part of the world. I do foresee it to come. I think it's probably going to be Beijing-led, to be honest with you. But at the moment, you can probably find better alpha outside of China at the moment.